Hello and welcome to another edition of Capital Calculus. I am your host Anil Padmanabhan. 8 years ago, India rolled out its biggest tax reform ever, the goods and services tax. It collapsed 36 tax jurisdictions and subsumed 17 taxes like octroi, excise, and so on to create the idea of one nation, one tax. Needless to say, the idea was that this would contribute to a seamless movement of goods and services across the country, improving the productivity of the Indian economy. 8 years on, the going has anything but smooth. Creeping acquisition by baburaj has introduced unnecessary complexity and worse, tax overreach. However, the GST Council, which oversees the tax, has decided that enough is enough. They are poised to undertake a reboot of the GST, which we shall call GST 2.0. The main objective of the reboot is to address the pain points, which is multiplicity of tax slabs and the complex tax processes, and of course, introduce hopefully a light touch in tax oversight. To walk us through the promise of GST as well as the feasibility of GST 2.0, we have in our studios today Haseeb Drabu. Haseeb is the former finance minister of Jammu and Kashmir and, most importantly, a founding member of the GST team and, of course, a previous guest on this show. Welcome, Haseeb.
Thanks, Anil.
Haseeb, I wanted to, begin with this GST 2.0 just after the Prime Minister made this claim on Independence Day that India is going to roll out the new version of GST in October. There was a press release issued by the government saying that they will shrink the existing 5 or 6, I forget number of slabs, to 2. And a few days later, the finance minister followed up with a tweet on X saying that basically the revamp includes a structural reform, which is addressing all the inverted tax structure and so on, and reducing the slabs. What are your first thoughts?
Well, when I look at it from what is available in public domain, the headlines of your former colleagues and current colleagues is basically the GST 2.0 has been reduced to rate rationalization and rate reduction. I don't think that qualifies for reforms. If you go back in time, while there obviously were huge issues, operational issues, which included technology, technological problems, all kinds of issues, plus you were trying to create a unified economic space. Even in the founding part of the GST Council, it was always agreed that you will have 3 rates, primarily, around which and then to funnel in rates, you would give it 4 or 5 years, and there was concern. The concern largely came from the fact that will we have that kind of revenues? Whatever you said about the problems in GST last 7 years, let's admit one fact, that you have today a situation where you have money coming out of your ears. You're doing 2.5 lakh crores a month. It's not a small number, Anil. It's 24 lakh crores a year on revenues. I come from a small state. It has tripled its revenue in 7 years. It's a consumption state, small state. So there have been obvious gains. Truly, as you said, in the operational part of it, there have been issues ranging from multiplicity of taxes plus the fact of coercions and avoidance and tax, stuff which we had thought would not be there. It would be more a regulatory regime rather than a kind of tax regime that forces people. It was, if you look at the original part of it, it was self-assessed. And then by a random sampling, you would pick up some of these and reduce it. Over time, obviously, the tax bureaucracy felt a loss of control over what it had earlier. And that included both the central bureaucracy and the state bureaucracies. Plus, of course, in a federal system, which has coalition politics, there were pulls and pressures from various states. So you started accommodating those pressures. Some of them pre-election, some of them post-election, some of them giveaways. and you created a situation which violated the spirit of GST. I think the call from the Prime Minister is to go back to what was the essential core idea of a few rates, principally a merit good rate and a demerit good rate. Those were the, and then you had one rate which was for mass consumption and a revenue neutral rate. So if you remember, we were toying around the idea of three. It was very, very difficult to funnel the multiplicity of rates into three, which is when it became five. And then you started adjusting it with bullion coming under 2.3 and so on and so forth. So it became complex. It's a good time to look at it, to rationalize, restructure, and do reductions. But that itself does not qualify for either GST 2.0 or reforming the GST 2.0. We need to move ahead and start from the design of GST, which is where I would then start directionally. I think what has been done by the GOMs directionally is correct, but the way it is being designed probably needs a little more of thought.
So Haseeb, so basically you say that India lost its way with the objective of one nation, one tax, became one nation, many rates. Now you're saying fixing that is not the reform issue. That can be fixed if you get your design right.
Correct.
So what is the design that you have in mind? You have just hinted at it, but can you just expand the idea?
So first, fundamentally, let's look at, even as you say, I wouldn't honestly agree with you on saying that we lost our way. We didn't lose our way. Yes, we made compromises. There were issues which were essential to navigate this. You have to understand that these are 27, 28 economies which are losing their powers to tax. So there obviously is a back and forth. Where I would start off in saying, where is the problem? If I see it today. And I break it up into two fundamental parts, B2B and B2C. I don't think B2B has huge problems. You may want to reduce the paperwork, you may want to increase the efficiency, but design-wise, B2B has worked well. People are getting input tax credits, there's no cascading effect happening. The fundamental difference between the earlier regime and this is true and has stayed. The problem really is in terms of B2C, which is what gave GST a bad name. It was seen as something that's coercive, the Gabbar Singh tax plus inflation, those kinds of things. So let us focus on the B2C part. B2B part, where there is a systematic thing, that yes, you may want to reduce the paperwork, make it more digital, but let's focus on the B2C and see how does one, and if you go back to what the Prime Minister said in terms of Diwali gift, it's about really the B2C. How does the consumer benefit? If there is one failing that has happened in the GST regime, it has been the customers haven't benefited as much as they ought to have. And there are a variety of reasons for that. We'll come to that as we go along. But that's how I would kind of position it and say, let's look at the B2C part of it. And the compliances aside for B2B, that is working quite well. Now, you don't have what I call revenue insecurities. You are clocking massive revenues. It has changed the fiscal profile of this country in terms of whether it's deficits or even at state levels. It's also brought in states who are not doing too well, the consumer states, into the forefront of economic policy. So from that perspective, I think we are on course. How do we then alter some of these issues that which are faced by the consumers? Why are they not getting the benefits of that? Is there avoidance? Are there plumbing issues? What kind of things should we do to bring that? Clearly, as I said, directionally, lesser rates means lesser complication. I'm not sure if 2 rates work, but surely 3 rates is something that was the original design of the GST.
Actually, it's not going to be 2 rates. It's very clear because even after that, they have said that there'll be the so-called sin tax. Now, tell me something. Yes. In today's day and age, it sounds ridiculous to call it sin tax. What is the sin in buying a high-end car or if you can afford it? So firstly, this nomenclature is also the political economy which is damaging GST.
True.
Right? So which provides room for the opposition to say Gabbar Singh tax and so on. So one, please answer why we don't need the idea of syntax. Secondly, this B2C problem, was it worsened by the fact that we entered a very high phase of inflation in the last few years? So what was an inflationary spiral became a target of GST rates, like in life insurance, insurance policies, the metaphorical claims that are made.
Well, a syntax really it does exist in public finance literature. It's also a legacy of the socialist era that you're bringing that in. I would fundamentally go into the classification of merit and demerit. You do want to bring in that element that cigarettes, alcohol, super luxury items, do not call them sin goods, but you can call them demerit goods. So you actually have a merit good rate and a demerit good rate. Broadly, that's a classification. You would want to promote the merit good rates, give them lower taxes, and provide some more taxation on that. But again, the rates can be rationalized, and then you can add cesses and whatever else you want to make it to 40%. But otherwise, if you look at the original part when GST Council decided on this quote-unquote sin good, it was 28%, 28 plus. So you were working with that rate.
Sorry to interrupt, but tell me something. When you say 28%, it's on the price of the good, right?
Yes.
So what is the point in calling it sin tax? Even if I put 5%, if the price of the good is 1 lakh compared to say salt, which is say 2 rupees, so 5% on 2 rupees and 5% on 1 lakh makes no comparison.
It doesn't.
So
where the problem is coming from, and that's a very, very important one which has not been really discussed anywhere. We have discussed this earlier on the show, is that when you have a GST, then do you want an MRP? What is an MRP? It's a legacy of your socialist pricing. In a controlled era, you would have maximum retail price. Where the real problem, in my opinion, came at that level, that what you're asking is 18% or 5% or 28% over the MRP. That's when GST got a bad name. In my opinion, the first big reform should be abolish MRP. It doesn't exist. It's a legacy of the past where producer pricing was happening. That's no longer the case now. So you are factoring in the entire chain of production and adding margins to it, right? Today you're not. So where is the need for an MRP? I think that's where I would start, which is why I'm coming to the B2C. What has hurt the GST most in that segment is the fact that I still work with a maximum retail price determined by a body that doesn't exist, yet is printed, labeled, and that is where the inflationary perception and also the fact that now there's an MRP, you could not exceed that. Here you are saying MRP plus 18, and that's randomized. In some cases, it's included. In some cases, it's not. So first reform, in my opinion, which is what I would call reform, is abolish MRP, let GST function. You'll automatically see a whole phase. Please also remember, no sooner than GST was launched, this economy went through a whole lot of trauma. Induced trauma and natural trauma. Induced trauma through demonetization. Massive shock to the system. We can debate whether it was good, bad, ugly, indifferent. Fact remains that it was a shock to the system. No sooner than that, you had COVID. Despite that, so out of the 8 years you're talking of Anil, you really have got 4 clean years. So let's not be harsh on the GST part in terms of its own panning out. And just imagine the kind of benefits you have had which are not getting recognized is how every single element of the economy is getting formalized. Whether it's through reverse charge mechanism, whether it's through input as people are coming in. Sure, there has been some concern over the last 1 or 2 years, people are deregistering, but that's a plumbing issue. You need to resolve those issues at the B2B level. But otherwise, it has always been something that has made a dramatic change in the structure of the economy, and that is one of the reasons why I fundamentally believe that it was a wonderful move to do that, formalize the economy, and that's where the 5 trillion, 10 trillion, 30 trillion team comes from, is your formalized economy which participates in the fiscal financing of the government.
But Haseeb, there is a problem here because you formalize the Indian economy, you bring people outside the system inside. So typical example is in banking, 400 million people are now got bank accounts, 500 million actually. They are now inside the system, looking outside, not the other way around. But this has come along with overreach, tax overreach. So recently we all read about how these tax sleuths were targeting merchants through their UPI accounts. Now, there is you are modernizing your tax structure, but your mindset is still stuck in the the excise, the idea of a production tax, what you mentioned.
Yes.
This is a consumption tax. So what happened? Didn't you, the founding team, visualize this challenge that here is a completely new modern system of taxation, and how do you reorient, retool the same personnel to align with these objectives?
It was discussed extensively. In fact, on a lighter note, I remember in the GST Council, it was said at some point that the discussion really, it hinges on one thing, कि मिठाई किसके घर जाएगी दिवाली पे? Because the whole legacy and the history of the tax bureaucracy in this country was about that. And the design of the GST system, randomized, scientific sampling, no interventions, self-declaration, self-assessments, all that created there was huge resistance from the tax. It was not only about states was the center, it was about the tax bureaucracy itself. Within tax bureaucracy, who should have a larger role, the central tax bureaucracy or the state tax bureaucracy? Absolutely no denying the fact that the bureaucracy came back with a vengeance. Exactly the way today, if you see, Anil, this country, the bureaucratic capture of the regulatory state, every single regulator today in the country is a bureaucrat. Should not have been so. But that's how it turned out to be. Yes, let's look at that as a separate element and see how do we reduce that. Linked to that is the compliance part of it. What kind of paperwork do you have? What kind of powers do you give? Plus, why did it take 7 years to set up a dispute resolution mechanism? It was this July that the members were appointed. What was happening for the first 7 years? If you have a robust, transparent, non-discretionary, automatic dispute resolution mechanism manned by people who understand this, the play that the tax bureaucracy had will be reduced. So even before the reform came, I think this July itself, the dispute resolution mechanism. Now, the idea would be to give it teeth, to make it more functional. The moment you do that, you will see the overreach reduce dramatically. So that brings you to the second point of your reform. Is very critical part of it is that strengthen the institutional mechanism for dispute resolution, which otherwise becomes discretionary with a tax person, and that's when the quotient starts. So that is the second part of it.
So this flaw in the design, which we have now sufficiently established, was it worsened by political compromise because of errors of omissions and commissions? So omission meaning they were scared of revenue loss, so they did a linear adaptation of existing rates to the new rate. But commission meaning you don't want to create an automated system where you lose control. So
a bit of both, to be honest. A bit of both. What I can say for sure is that the original GST Council was fairly cognizant of this issue, and we were seeing the pulls and pressures. I will not go into very specific cases, but I do remember state elections in one northeastern state. If you go back in time and check it out even now, just before the election, rate reductions were done. So there were compulsions, the genuine compulsions. Obviously, there's a political economy of GST itself. You can't ignore that. There's a political economy of GST Council itself. The more number of the ministers involved, each had their own constituencies to address to. I mean, Gujarat was hell on fire about ice creams. Mizoram was about fried fish. So you had all these, which may seem very trivial from a macroeconomic perspective, but those drove very fundamental things in the GST Council. So it also became a way to build a consensus, which is where it was nobody's contention that you will sleep in you slept in a VAT regime and woke up in a GST regime. Not possible. So you were making these compromises, but directionally I don't think there was a reversal. I think if you were to ask me, The fundamental thing that changed in India after 1990 was that the direction of economic reforms never changed. The same is true of GST. You may have taken one step forward, two steps backward, but directionally you were going in the same direction, states were aligned to it, but I think we have now stagnated. And various errors have come in for a variety of reasons, because some areas, you should also realize that in the last 8 years, the pecking order of states has changed. Consumption states are now, growing fast. We always thought that states like Maharashtra and Tamil Nadu will not do well, but the way the services part of it has boomed, they're doing phenomenally well. So some interstate pecking order has changed. There also has been a great concern, Anil, and that is something that is doesn't get talked about very frequently, is how this whole assault on federalism is being seen. That, there is a state, Tamil Nadu, I want to walk out of GST Council. The finance minister at some point made a statement of that kind. So those issues also need to be addressed, because you can't have a system that actually creates a fissiparous tendency in the overall regime, which will violate your whole thing of having a uniform economic space or a unified economic space. All those are dynamic, they're not static. So you have to constantly react to situations as they emerge in policy terms. I think that's where the action should be, trying to understand. And it's a good time right now. No national electoral pressures right now. So you are at a liberty. Economy is doing well. Fiscally, we are doing. I do not recollect in my limited to 30 years, 20 years experience fiscal, that we have been so well off as governments. Even poor governments are today very well off in terms of raising tax revenues. If there's a slack, it's from the non-tax side. Tax side, certainly not.
Correct. But Haseeb, I'm very baffled now when you were there in the founding team. Things like the popcorn episode. It's so bizarre that you will tax popcorn which is caramel coated at a different rate. You will, and if it is sold in a theater in person, it carries a different rate. Booked online, it carries a different rate. Now, where did all this come in? Was it the original, or it was, slipped in during the notification stage?
No, it was there in the origin. You see, it becomes, the caramel popcorn thing is, of course, must have come at the bureaucratic brilliance of somebody. But I do remember one episode which I've shared with you earlier, maybe offline, has been this whole point when UP came up with a thing saying that we want exemptions for goods, which was fine. You can do exemptions and not tax them or tax them lower. But the way it was seen was, vrat samagrihi, puja samagrihi, those. Then that logic extends further and becomes bizarre. Here, there may have been a very clear logic, political logic as well. And let's not ignore that. It's, as I said, political economy is very important. So if you are kind of classifying them as vrat samagrihi, puja samagrihi and stuff, there was a class of goods, makanas for instance. But then there is no stopping saying makanas which are flavored in certain way will be taxed differently. So the seeds of it were seen, and it was not about ignorance. It was about trying to accommodate various pressures and pull. Like Bihar has huge makanas, huge, right? 95% country production. It makes a lot of difference to them. So you were trying to, and the style at that point was, please do remember that you were trying to build a consensus and you were making compromises. You made serious compromises. To the point that the union budget is basically an expenditure budget now. Where is it a budget of the kind that you saw in the olden days of taxation? The finance ministers given a lot of power. And it took a very enlightened person like Arun Jaitley to do that, to forego the powers and stuff. So it was a process of that kind which resulted. But these kinds of things of the caramel analysis is misplaced bureaucratic brilliance. And again, as you said in the beginning, the bureaucracy trying to claw back its way into the thing, as they have done exactly the same things happening on the other side. On the regulator, you have moved from a controlled command economy to a regulated economy. You check the top 15 regulators in this country. They're all civil servants, IAS officers retired. Starting from the Reserve Bank of India to SEBI to any IRDA, just name them. It's basically getting back of the system.
No, it could also be that you don't have that kind of bench strength because you're also an economy which is now coming into its own. Look back, you could name the economists who were intersecting with public policy like you or Montague or Vijay Kelkar.
Sure.
today there are far more, right?
Yes,
So
far
I
more.
guess it will take time.
Yes,
It's
absolutely.
to
Absolutely.
allow that revolving door
Yes.
between private. Actually, I just want to stay on this compromise part. I don't mean to play it down, but I think you touched a very important point on the tax pooling of tax sovereignty is a term you coined. So explain to our viewers as to how this compromise is achieved, particularly by Arun Jaitley's use of culinary baits. I think one of them was
Yeah,
Kashmiri food.
yes, absolutely, absolutely. No. See, what Arun Jaitley brought to the thing was a certain big picture that I will compromise on small matters, but I need the end game. Do recall that GST didn't start in 2014. The GST Council, in its earlier avatar of the empowered state financiers, started in 2002.
That's correct.
There was absolutely no consensus at that point of time. So you were willing to pool your tax sovereignty of the union with that of the states in order to get them on board. Which brings me to the third point of reform. That again, stop and step back. Don't get consumed by rate rationalization. That's easy. Take the harder step. What is happening with real estate, your fastest growing sector? What is happening with alcohol? What is happening with petroleum? What is happening with electricity? Why is that outside the ambit of the GST? It's out of the ambit of the GST because states don't agree. How do we resolve that? Can you now start thinking that, look, I have done a national GST, very stable, you're earning 2.5 lakh crores, you can still throw away quite a few of these and you'll still be comfortable. How do I engage with the states to allow them to build a system so that these 3 or 4 key items, whether it's real estate being principally large, power and petroleum would be really the big ones, incentivize the states to build a GST system for those 3-4 commodities. Then you're at a different level altogether. Now here you may want to compromise on how much the center controls it. If I were to use the Jaitley style, then I'll say you keep it. But at least come on to GST. I'm not going to touch your revenues. No revenue loss. You want to align with your parallel states, southern states, northern states, eastern states, arrive at a broad rate structure and go ahead and do it. But do come to the GST taxation system. How we design it is a matter of detail. I'm saying, okay, leave it to them. That would be the Jaitley kind of mindset. Bring them on the table. Then 5 years later, we'll see how it pans out, what are the benefits, how I can share it, how I can make it one GST again. But today, I would get them on board on the principle that, look, all states do their own GSTs on real estate, for instance, subject to 4 or 5 conditions, and keep them. That would be a reform. Now, that's something that I would start off with, rather than doing this wasting time on, rate rationalization obviously can be done by even the bureaucracy and the GOM. What needs political foresight would be something like getting these 4 or 5 taxes, which are large part of taxes, into the ambit of GST. Today, they're again the same thing. It's, so you have this very nice GST system, which is operative, internally self-consistent, but outside the ambit of that are a large number of taxes. And today you have a situation deliberately that the states earn more, spend more than the center. So why are you leaving that part? And a large number of your customers are not getting the benefit of GST because these are outside the thing. Every day your petrol, your real estate transactions are all messed up because of this cascading happening, inflation happening. And when you come back to the original question you asked, inflation, these are your input-led inflations, and they are outside of the ambit of GST. You can't blame GST for that. So if I were to put today the biggest reform that should take us to next level 2.0, genuinely 2.0, would be to do something like that. And then along with that, by all means, the inverted this thing would be there, better compliance, better input tax credit. Today, there is a huge issue with the really organized sector of what is now called taxable value. So you may buy a good for 100 rupees, the taxable value is 40 rupees. Look at it this way, what is a 5-star hotel doing? A 5-star hotel is actually today telling you my room rent is $1,000, all right? So technically you should pay 180 rupees as GST. What are you doing? You're paying 5 rupees. Why? Because you're saying that there is curtains, then there is a service, then there is air conditioning, then there is this. You break it up into, so taxable value of the room is not 1,000, it is 200 rupees. And this is now all creative accounting. Let's not, because chartered accountants also have their job to do. So let's understand those kinds of compliance issues which are at the worm's eye view. So you'll have the bird's eye view, you'll have the worm's eye view. Combine the two and you will have a robust mechanism for GST.
So finally, what you're saying is that the grand bargain, if the center has to pull off its states, it should be for this to bring taxes like alcohol and petroleum products within the purview of GST, directly or indirectly.
Yes, this should be. So it becomes a grander bargain. Plus also triggers, I'll tell you. I also saw GST not as a pure tax regime. It's also a macroeconomic initiative that took place. Today we are despite the fact that it's very much a part of the GST original bill, I think section 15 if I'm not mistaken, we are committing a huge error of taxing foreign nationals, tourists. There is no tax refund, though it is provided for. Now technically, you cannot tax a foreign national. But leaving that aside, India can become a huge shopping destination if you start doing tax refunds. Why has it taken us 8 years to do that? You are at a huge disadvantage vis-a-vis your neighboring countries who are, let's say Dubai for instance, huge shopping destination, right? Because there's nothing. I am putting 80 to 28%. Imagine the kind of flip it will give the economy if you start the process of saying I'll do now for foreign tourists who are carrying back goods like you do it anywhere else. You will have it at the airport and you do a refund. All electronic now, and you will create a macroeconomic impulse to create India as a shopping destination, come and tourists start visiting, your hotel rates come down and all that happens. So those are the kind of reforms that one should now talk about, because we are not today constrained by the revenue insecurity. What I remember from the GST Council of the first one was huge insecurities of revenue. What will I do which is what came to the last point I wanted to mention was, where did that compensation cess arise from? Again, I remember pointing this out, writing it as well, that it's not a compensation cess now, it's an insurance policy. No matter what I do, there was no incentive for me to do it. Now, should we continue compensation cess or just put an end to it? You will have 26 states on your head with that, right? But that's a call to be taken. And that's where the bargain becomes a grander bargain.
But it ends in July. It ended in July.
Yeah, but it ended 2 years back. It ended 2 years back. It was revised. Yes. And it was then a slightly more complex and not very clean system was evolved, where you started giving loans to states, and that loans came at a lower cost. Why? We can take an either or and say, now what the best case scenario in the best of forecasts on a revenue neutral rate in GST Council 2017 was 60,000 crores. We are 4 times that amount today, Anil. We had thought 60,000 crores is the limit that we would touch. We are doing 2.5 lakh crores.
Thank you, Haseeb, for talking to us. So as Haseeb has spelt it out for us, that yes, it is important to reform GST, but it needs to do much more than to pass off reforms as rate reductions or collapsing rates and improving procedures. He has spelt out basic fundamental tax reforms, GST, which includes bringing alcohol, tobacco and petroleum products within the purview of GST. Now that is not going to be an easy task, especially given the deep political differences between the center and state. But this, like Haseeb pointed out, is a very good time. The Indian economy, despite Donald Trump, is doing well. And when things are well is when you undertake tough decisions. So presumably, GST 2.0 is the beginning of a new era of indirect taxation in this country. Thank you for watching. Don't forget to subscribe to StratNewsGlobal.Tech on YouTube. Hit the bell icon so that you don't miss any updates. And please, to share your thoughts, ideas and suggestions with us, I'm available on X at Capital Calculus. I'll be back next week with another episode. Till then, stay safe.